Welcome to Swing Trade Workshop. My name is Kumar Ashok and today is 19 January 2026. Before we start, first the disclaimer that I am not a SEBI registered advisor and before any investment decision, please consult your financial advisor. Rules stays the same. The important point I want to stress is that stay in Nifty 500 stocks. It's very risky at this moment to play in a small cap and micro cap. So what does the market watch today? Market was quite flat, quite weak, except finance stocks. All other sectors were quite weak, basically because of no buying, lack of liquidity, you say, or whatsoever. And investors are quite skeptical about the quarter three result, and because of all that, they are actually trying to protect their capital rather than going aggressive before the budget cycle. So what I did today, so basically I bought a bit of Nifty Bs, this basically Nifty 50, because it is actually in a good correction and it's good time to hedge your portfolio a bit. Without that, you never know how the things will go upside down. So that is why better to have some hedge by buying some Nifty Bs. Then I bought a little bit of Motilal Oswal Nasdaq 100 ETF. We'll discuss more in the next page. Then I bought a bit of software stocks like Netwave, Persistent, Tech Mahindra, and LTI Mindtree. Why? Because Netwave gave exceptional result compared to its Q2. Q3 was so nice. I mean, it started to convince to the market that AI boom is going to come. Not, I mean, sooner than later, but it is going to uh, go ahead with that theme. Then Persistent, okay, then Tech Mahindra result was good. LTIM result was not that excellent, but kind of okay. And Persistent, I hope it will do well. The result is not out yet, I guess. And then, but still, I am optimistic that it will also give you a similar kind of result. Because of that, I bought a bit of software stocks. I did loss booking in data pattern, Kirloskar Engine, LT, Larsen and Toubro, Precol, basically the auto ancillary, sorry, and then Redico, basically the premium alcohol company. So basically, it's important at this moment to protect the capital. For that, I do not mind that if the stop loss getting hit, better to get out because you may get better opportunity. No need to worry. You will get better opportunity, better company in some other day. So worrying about booking a loss is dangerous than cutting the loss and moving on. Okay, this is how the my portfolio looks like, where graphite stocks looks positive, HL, like Mahindra, C8. So C8 result probably is out, but I didn't check yet. But I hope it will do well. You know, this is what is a market watch for today. Then the interesting thing is the food for the thought. Okay, so why the market is so chaotic? You know, because the main reason I feel is weak rupee against dollar. Today it is 90.90, almost 91 rupee per dollar. When this situation occurs, who gets hammered? Basically the small caps and micro cap. Why? Because it will be difficult for them to uh, get cash. They always have a scarcity of cash because they are small caps, very difficult to arrange capital and then grow. So they, that is the reason you see any small gap, the significance of correction is superficially high. And then what are the causes? Causes are majorly known. I think last 1 or 1.5 months, this is a common discussion by every investors. But still, I'll just read them. That is, global trade tension is going on. US tariff is 50%, so we are not able to sell more products to outside rather than we are importing more, which is dangerous. Basically, we are eating our dollar savings rather than earning new dollars. Then interest rate differential, strong US economy, but RBI is cutting rate. So why the investors from the outside will put money here? Because they know that rupee is going to be weaker, and then by default they will lose money. You know, so that is where the massive outflow of foreign funds are happening. So uh, some trade talk or a diversification of trade negotiation has to be given more priority by government, or else the market will continue to like this. Then widening trade deficit, like today I saw it is already $64 the Brent crude per barrel, and commodity prices are rising. So basically, whenever we are you know, uh, producing steel, copper, and all that, the raw material cost is so high that it will hit the margin probably. And then same for the petroleum products refining. When the Brent crude or the US crude price is increasing, then the margin will be in a short term market, margin will also be impacted before again refiners increase their price. So this one they cannot quickly respond to the price change, so they have to bear the losses. So that is these are the major reason why rupee is further getting weaker. So what are the impacts? Like I told, small cap microbes are really in terrible situation, and as early as possible you must be out from those stocks, because don't think that you will not get opportunity to get in. Small cap, micro cap, every quarter you get opportunity to get in. They are easy to be played around. So people play catch actually. Those market makers, they play catch actually. They buy a lot, then sell, then buy, pump and dump continues. So if you are thinking that I sold a great exceptional small cap stock and tomorrow I will never get on that same price, you probably are not that um, thinking in a right direction. So think about it, save your capital. I mean, down trim your portfolio a bit in small cap area would be my recommendation. Then what action we must take? So like I told, I bought software stocks because it's like an basically pharma and software are the hedge against the dollar weakness, because they earn in dollar, so it basically compensates or it supports the business actually. So in pharma space I can think like Lotus Lab, the other one could be the Divis. They are quality companies, but observe always when there is a good correction or weak sentiment, then only get in, because at this moment no stock is getting spared, everybody is getting hammered. So be careful when you are taking positions. You should have a justified reason why you are buying something. Then the important discussion is the foreign ETFs. So to protect your capital, the best option could be, when USD is strong, is to get into. I'm not saying that you put everything into foreign ETFs. That could also be riskier, because you never know. Maybe foreign, because most of the crisis happened was because of the foreign markets. So who knows? Maybe because of huge amount of debt by US market, or a conflict between US and China and Russia, anything could be chaotic. So at that time, maybe market will have a dangerous situation when you are investing in foreign portfolios. Just giving you the a bit of warning that foreign markets have these risks. But hedging is the main strategy. When you know that your home market is not that doing well, a small portion like 20% around capital, I guess, should be there in foreign ETFs. If other these modes are so easy actually. ETF is as same as like a stock you buy during the market hour, and then you do not need to get into all those conversion rates and all that. That is why it's a very comfortable way, and it will give you okay kind of return. So it will at least protect your capital. So that is, I think, for today. Nothing interesting, because investors, traders, everybody waiting for some news that can give a hope to the market, because no news is there, so everything is looking so dried up. So with that, I would say thank you very much for your time, that you are continually watching my videos, and I would recommend that please subscribe, like, and then support by sharing the video with your network, and that would be a great help for me. With that, I thank you.